want to talk about another broad theme for 2020, and that's thematic investing. You know, pot was big last year and it fizzled out. Jay, Global X, you specialize in thematic investing. You've got ETFs for a range of disruptive technologies out there, robotics, cloud computing, electric vehicles, video games, cybersecurity. What's seeing inflows? What are investors putting their money in right now in these thematics?
Well, I think one of the hottest themes right now is cloud computing, and it's, you don't have to listen to us. Look at what the big tech companies are talking about in their earnings. AWS is most of what Amazon's focusing on. IBM is replacing their CEO with the head of their cloud unit. Microsoft, all they want to talk about is Azure and their 60% revenue growth. Google is now breaking out their cloud revenue from the rest of their revenue reporting. So this is a theme that isn't just coming from the ETF industry, this is coming from the technology sector saying our growth is going to come from cloud computing.
And I'm looking at your largest holdings in your cloud computing ETF, that's CLOU is the symbol there. There it is, right up there. Shopify, Paycom, Paylocity, they do payroll software essentially, Paylocity. Zscaler, I see Netflix here. I don't see Amazon, interestingly, but this is an interesting group here. Again, these are people who are specifically investing in cloud computing infrastructure, essentially.
These are software as a service companies.
Yeah.
So they're being built on top of that cloud infrastructure to deliver software to enterprises who license that software. They pay a recurring revenue, becomes ingrained in their businesses. It's a very sticky client contract. So we've purposely kind of tilted the exposure of the ETF away from the Amazons and away from the Googles because they're not really pure plays in the cloud computing space. We've tilted it more towards those pure play software as a service companies that are built through the cloud and leveraging that technology.
The other one I see is inflows is robotics and artificial intelligence. The symbol here is BOTZ, bots, clever with that. I see NVIDIA, which is on everything on any kind of this technology list. Mitsubishi, Intuitive Surgical, they do the robotic surgery, right? There's big, fairly large weighting in Intuitive Surgery as well. I like this idea, and it seems to have caught on a little bit. This was one of your big ETFs last year.
Absolutely, and I think this is intuitive with investors. They see that automation is getting more powerful, that companies are investing in robotics, they're investing in bringing in AI systems, but they don't really know where to start. Who are the big robotics companies? A lot of them are in Japan, some of them are in Korea and Germany, so they're not kind of common knowledge to US investors. The ETF, I think, is a perfect example of giving people that exposure to the companies best positioned in the space.
And just as another example of how stuff pops in and out of the public consciousness, you have a Genomic ETF. The symbol is GNOM. And one of your holdings in there is GenScript. Now, this is a rather obscure company, but they do the detection kit for coronavirus, right? And that stock has been moving, and it's been moving that ETF. GNOM, again, the symbol there, you're looking at that right there. Tell us about GenScript.
Yeah, so people, I think, have trouble kind of understanding what is genomics, but it's a lot of kind of reading the genetics of people, of diseases, and they use that to create brand new technologies for treating healthcare. So GenScript is making the devices that detect coronavirus in China. Of course, that is playing a critical role right now in, in China and in the global economy as people are trying to understand the spread of that disease.
Good way to show how broad ideas move ETFs, and sometimes individual stocks like Tesla moves these ETFs. They're involved in virtually everything, macro and microeconomics. Armando, you had a big year with your ESG funds last year. You're continuing to see inflows this year. We may see a doubling of ESG assets under management.
Yeah, and it all goes back to, again, last year was an inflection point, the realization that this is not a niche play, this is mainstream, this is going mainstream. This is the understanding that ESG-related risks play a real role in asset pricing and therefore in portfolio construction. We're launching the Advanced Suite later on in the year. And that Advanced Suite of ETFs. That will be the most pure play in ESG, where you'll have high rating ESG companies. At the same time, you have 16 screens. So for instance, fossil fuels, not only you're screening out fossil fuel companies, but the entire value chain. So any company that gets revenue from fossil fuels will be screened out. And again, it's the realization that these are real business risks that have an impact in portfolio, and therefore you have to build your portfolios thinking of ESG risks.
Yeah. It's nice to see inflows into ESG, that's not a surprise, but Ed, what surprised me is the overall inflows this year. We were just talking before the show started, 73 billion in inflows into ETFs this year, bond funds and stock funds overall. That's a tremendous start to the year. We're going to pass $5 trillion in assets under management very quickly at this rate. besides ESG, last week we saw huge inflows into your boring plain vanilla funds. Your S&P 500 iShares fund had big inflows last week. Investors sort of came back into the business overall. Ed, thoughts on flows here?
I mean, look, ETFs are gaining momentum, and as the landscape shifts and advisors want more and more ETFs, they're going to look to different versions, whether it's thematic or whether it's basic. They're just going to come more into play. I mean, the biggest year we had in ETF flows was about 3 years ago, and the last 2 years were just behind. We've never been off to this start that I've seen, and quite frankly, it looks like we could be in for a great year for all of us. And I think that says a lot for where ETFs not only came from, but where they're headed.
I keep looking at the bond funds, waiting for the yields to sort of back up a little bit and the prices to come down. I keep looking for that, great month where we talk about massive outflows in bond funds, and it never comes. It's been 3 years I've been sitting here waiting for this to happen. And basically everyone has sort of convinced, we've all levitated ourselves into believing this is it, folks. We're going to have lower rates. Europe and Japan seems to want to get positive yields. But not very positive yields. Armando, are you confident we're going to stay rates are going to stay lower for longer?
We do believe the rates are staying lower. That's why we're also recommending emerging market debt, high yield as a way to pick up in yield. Again, because we have a moderate constructive view on market risk. What I would say is with bond funds, with fixed income ETFs, what you see is the replacement of bonds for fixed income ETFs. So it's not so much just the market.
Yeah, that's a very good point. All right, guys, we got to go, but that's been a very stimulating discussion. We hit on a lot of topics. These are the experts in the field. It doesn't get any better than this, folks.